Hey everybody, this is John and welcome to the free video. So we had a pretty decent sized down day today, down 2.2%. And so the question is, what next? So a couple things, what we've been doing with this current market environment, and I think this is critical to understand on days like this, why we kind of do what we do and sometimes feel like we're maybe hitting it a little too hard in terms of the principles. But the idea that, if you're focusing on buying the dip, when the 10-day moving average of the put call ratio gets below 0.80, the odds of a big decline increase exponentially. And so our rule of thumb there is that we stay 80% cash, and then the 20% we have exposure to, if we're going to be long, we're going to be focused on honey badgers, okay? What's an example of a honey badger? Well, one stock we have is like Wing. So that's one where it doesn't really care what the rest of the market is doing. And then we can have some hedges. All right. And hedges are like, VIX calls, different things like that. And that's just kind of the rule of thumb. And now on a day like this, you can kind of see why. And so now and then of course, so that we had and then the skew, and the skew is over 135, same thing. So that's the rule there. So now we're sitting here, we got a big decline like this. Now, of course, it wasn't 100% short, so it wasn't like, there are times when we've gone heavily short and it's been great. But this current environment is like, if you're short, most of the time it's hurting. So there's easier ways to short. You wait for the price break, and then, as an example, if this market is going to truly be a pretty decent short versus like, oh my God, this is just a reaction to Trump, then we get a chance to short the rally back up to the 21 and then look for the rollover. So there's plenty of time to short, and there's plenty of safer opportunities to short as well. Is the whole point there. So the question now is like, all right, well, what happens next? So the Qs took a hit. What about some of the other sectors? I mean, look, financials look like a death here. I mean, that's a pretty nasty topping pattern. Industrials don't look good here at all. Okay, select materials don't look good here at all. And then even the diamonds here, don't look good here at all. And so the question just becomes, all right, well, we've seen a lot of money pouring into like the Amazons and the Netflixes, and they kind of gave it up today. Now we're seeing some of these bigger sectors, and it's, are we setting up for actually a bigger decline here, or is this kind of a buy the dip opportunity, and how do we know? All right, so let's talk about that. All right, so here's a really, really critical way to tell if a market it's a short-term sell-off that's about to turn higher, or it's something nastier. Okay, so if you've got something like this, so here's the NASDAQ, and this was from a couple weeks ago, but you've got the monthly, the weekly, the 4-day, the 3-day, the 2-day, the daily, the 4-hour, the 2-hour, the 60-minute, the 30-minute chart, all green. Okay, so what this tool does, it measures the 521 EMA cross, and if it's positive, okay, so this is a 1-minute chart here, so that's the 5 EMA on top of the 21. So if it's positive, it's green, and then if it's negative, it's red. So if the 30-minute on up are green, and you're getting a sell-off that stops at the 20-minute or sooner, but you can't go past the 20-minute, then when you see the first rotation back on the 1-minute, you can buy it with a stop at the lows and then watch it fill in the middle. All right, it's kind of nice. It's kind of like it's almost like I'm not into baking, but my daughter's into baking, and I watch her put the cream filling like in the eclair or on the cake. It's almost like the same thing. It's like it's just filling up, so it's all green, if that made any sense at all. So that's the crossover that I like to look for in that situation. All right, so you can see here what happens. Now in this case, we did get a rally to the close, but before we were red. Okay, but what happened is we went past the 20-minute, into the 30, into the 60, into the 2-hour, into the 4-hour. Okay, when you go that deep, you cannot, just because you get a 1 and a 2-minute doesn't matter. Now we did do a little scalp trading at the close, but what I'm talking about is if you're looking for a bottom. In this case, you actually need to go all the way up to the 30-minute to get a confirmed bottom. Okay, now that doesn't mean you're going to catch the dead low, but when you get in, you're getting in at a safe spot. Okay, so it's just that multi-EMA indicator, and then of course down here this is telling you on what time frames there's squeezes, and on all 18 of these time frames right now there's no squeezes on the NASDAQ. But I do want to point out that when we look at, say, the industrials, okay, XLI, and say, okay, well, what's going on here? So, I mean, what a disaster this is. So all the EMA crossovers from the 10-minute all the way to the weekly are negative, and we got a weekly and a 4-day squeeze setting up. This sucker is getting to get annihilated to the downside. All right, so that's the kind of stuff that helps there. And then the other thing I want to point out here in this statistical tool that we like to use is that, and first of all, of course, you can see these are profit zones. So essentially when you come up to the profit zones, you're done. So you get up to profit zones, you revert back to the mean. You get up to the profit zones, you know, you're heading back to the mean. And that's just been working like clockwork here, profit zones, profit zones. So, and at some point, if we get down low enough, these profit zones will switch to the bottom, all right? So, but look at this. So if we cross the 8, okay, if we cross the 8-period moving average, generally 43% of the time, we're actually going to hold the 21. We'll actually turn back higher before we hit the 21-period moving average, okay? And then when we cross back above the 8, you can see that typically we're going to move 28 points over the next 4 bars. Valuable data. But what's more important here is that once you cross the 21 to the downside, there's only a 14% chance that the 34 is going to hold. And if you cross the 34, there's only a 5% chance that the 55 is going to hold. The point here is that when you crack that 21, the chance for further downside actually increases, okay? And that's just an important stat to understand, just in the markets in general. All right, so what are these tools? So this is great. So I'm going to be doing a live trading class on this tomorrow, Tuesday. So if you want to join me for the live trading class, here's what you got to do. If you go to simplertrading.com/bundle, you'll come to this page, and this is for our indicators. Now, as a gold member, it's just $397 for that multi-cross indicator. That's that one I was showing you across the top with 18 time frames, okay? And you can essentially read the markets like almost like a surgeon, which is great. And then the profit zones, those are the levels where the move's been petering out like almost every time before reverting back to the mean. If you're a non-member, it's just $497, but here's a hack. If you would like to just become a member, see that click here button? Click on that. It's $7 for a trial, and that'll save you, that'll save you that money. And then if you don't like the trial, if you don't like it, just cancel. The membership, we send out text alerts with specific trade entries and stuff like that. So if you're going to try it, be sure to take advantage of that. The explosive bundle, which does sound like something like irritable bowel syndrome or something like that, but it's actually because it includes the multi-squeeze, which is what sets up explosive moves. So you get the multi-cross tool, the dynamic profit zones, and then the multi-squeeze, which also lines up and shows you all 18 time frames, whether or not there's a squeeze. I mean, I cannot now look at a chart without the multi-squeeze and the multi-cross. It just gives me so much information. And this includes, both of those include live trading on Tuesday, which is tomorrow. Again, $697 if you're not a member, just $597 if you are a member, and that's $1,488 worth of indicators for $597. The strategic bundle is all that plus that stats tool. That's the one that shows you like, hey, there's a 5% chance that the 55-period moving average is even going to hold if it breaks the 34 and all that kind of stuff. That's if you like to geek out and look at the stats. It's not for everyone. And again, that's $897 if you're a member, $997 as a non-member, $2,285 worth of tools for that price. So all of those include the live trading. If you're like, you know what, I just want to do the live trading, just scroll down. There'll be an option down there just to buy the live trading for a pretty reasonable price. And I think tomorrow's going to be a fun day to trade on Tuesday. I mean, who knows what's going to happen, but these tools, I'll show you how they guide us to doing that. All right? You guys have a fantastic evening, and looking forward to working with you in the class tomorrow.